Hey everyone, welcome. Today we're going to do something a little different. We're going to become financial detectives, and we're going to look at the data from just one single trading day, January 7th, 2026, to see if we can uncover the wild stories hidden inside the numbers. We've got four very different stocks, so let's just dive right in. So here's the big question, right? Can a simple list of numbers actually tell a story? I mean, you look at a stock chart, you see a data table, it can all just look like a wall of noise. But what if I told you that inside all that data, there are these incredible tales of triumph, of struggle, even epic failure and cautious hope? Well, today we're going to prove it. We're going to decode the language of the market. So meet our cast for today, and let's not think of them as just tickers, okay? Let's think of them as characters in a drama. We've got Lucy, who I'm calling the supernova, just burning incredibly bright. Then there's GPUS, the breakout star, making a huge move. ASBP is the turnaround, trying to make a big comeback. And then there's OCG. Well, that's our cautionary tale. Four different companies, four totally different stories, all playing out on the exact same day. First up, let's talk about the heroes of the day, our breakout stars. I mean, these are the stocks that just grabbed everyone's attention with some absolutely explosive strength. We're talking, of course, about GPUs and our supernova, LUCI. And here is exactly why they were the stars of the show. Just look at these numbers. Lucy rocketed up almost 44% in one day, and GPUS US wasn't far behind, with a massive 33% jump. A move like this isn't just random market chatter. It is a huge signal that something really significant is going on. But what's the engine behind a move this big? Well, that engine is volume. A price move needs fuel, right? And in the stock market, that fuel is just the sheer number of shares being traded. Look at the scale here. It's unbelievable. LUC traded over 42 times its normal daily volume, and GPUS nearly 4 times its average. This isn't a few people buying in. This is a crowd, a massive crowd, rushing through the door. And this is just a fundamental principle you have to remember. If a stock jumps 40% on really low volume, it might just be a fluke. Kind of suspicious. But when it soars on this kind of massive, overwhelming volume like Lucy did, that tells you the market is basically screaming its approval. That move has real conviction. It has power. It's a story with a whole lot of authors. This quote from an analyst really nails why the move was so important. Think of the 200-day moving average as this huge, long-term trend line. For a long, long time, Lucy was stuck underneath it, which is a really bearish or negative sign. By blasting through it with so much force, Lucy didn't just have a good day. It signaled a potential rewrite of its entire long-term story from negative to positive. That's a huge deal. All right, now let's switch gears to a much more complicated story, ASP. See, this isn't a clean breakout, not at all. This is a story of conflict. It's a potential recovery that's fighting against a pretty ugly history. It's a battle between hope and skepticism, and you can see it playing out right in the data. And this table just perfectly captures that tug of war. On one side, the bullish side, that's the side of hope. You've got some really positive short-term signals. The price popped above its 20-day average, a momentum indicator called the MACD flashed a buy signal, and yeah, we saw that massive 10x volume spike. Those are the green shoots. But on the bearish side, the reasons for caution are pretty big. It's still trading way below that all-important 200-day average, and the long-term trend is still pointing down. It's a classic fight between new hopeful data and an old pessimistic trend. So the bottom line here is that ASBP's story is all about potential. That short-term energy, it's undeniable. But that long-term weakness is like this giant weight holding it down. This is exactly what the very beginning of a turnaround can look like in the numbers. A big fight between new positive momentum and that old negative trend. The final chapter of this story definitely hasn't been written yet. Okay, now for a complete 180. Let's look at our cautionary tale. If ASBP is all about the hope of a new beginning, OCG is about the grim reality of an end. This is what it looks like in the data when the technicals don't just bend, they completely shatter. The story starts right here with this one number. OCG closed the day at just over 2 cents a share. This isn't just a low-price stock. This is a stock that has gone through a catastrophic failure. This price, all by itself, tells you the story has taken a very, very dark turn. And if the price wasn't dramatic enough for you, check this out. OCG is trading 99% below its long-term 200-day average. I mean, it has effectively lost all of its value compared to its own recent history. This isn't a dip. This isn't a correction. This is a total collapse. The sheer distance between the current price and that average tells a story of complete and total abandonment by investors. Now, you might see a term like deeply oversold and think, oh, bargain, time to buy. But, whoa, hold on. In this context, it is a massive warning sign. The RSI, that's the Relative Strength Index, it just measures price momentum. And a reading this low doesn't mean it's due for a bounce. It means there is a total, complete lack of buying interest. The buyers have left the building. It's a sign of extreme, persistent weakness. So to really get the difference between a breakout and a collapse, you gotta follow the money. And a key tool for that is something called the ADSC, or the accumulation/distribution line. It's actually pretty simple. A positive number means money is flowing in as investors are accumulating or buying shares. A negative number means money is flowing out as they are distributing or selling their shares. And this chart just lays out the two extremes perfectly. Look at our breakout star, GPUS. It's got a strongly positive reading of over 22 million. That confirms that real money was flooding in to fuel that rally. And then, look at OCG, a negative reading. Money wasn't just staying away, it was actively flowing out. This is the numerical signature of accumulation versus distribution, clear as day. So, we've looked at our supernova, our breakout, our tricky turnaround, and our cautionary tale. What are the big lessons here? How can we take these 4 stories and boil them down into some clear principles so we can read the market signals ourselves? All right, here are 3 keys you can use to start reading these stories in the market. First, always check the volume. Think of it as the authenticator. A big price move without big volume is always a bit suspect. Second, use moving averages as your map to understand the long-term trend. Is the stock healthy or is it fighting for its life? And third, use indicators like the RSI and 80C to read the subtext, the raw power and the money flow that's really driving the story. So there you have it. We've seen how the data from just one day can tell 4 completely different stories. And these stories of hope, of collapse, of explosive change, they're being written in the numbers every single day. So the only question left is, now that you know a little bit of the language, what stories are you going to find tomorrow? Thanks for tuning in.